Where do we see the forward trends across Europe? I think the problem initially with continental Europe as opposed to the UK is you have a multiplicity of regulatory, tax and legal systems that for every single country you want to lend in, you have a very significant different set of rules that would be applicable to the kind of business you're trying to write. So, for example, if you want to take a position in Italy and lend a mezzanine, that's very complex in terms of how you obtain your security, whilst if you want to do it in Germany or France, it's a little bit more straightforward. But then the regulatory issues in France drives you towards having to be a registered bank. So every country has quite significant differences in terms of how you can execute your transaction. So I think what we do need to see across Europe is a much more harmonized approach. Now, that can take a very, very long time to arrive. And I think you won't see that coming out of the legal systems, but you will see it coming out of the structural approach and the way in which lenders will approach the individual borrowers. I think if you look at the second part of that question, which is in terms of what the market is trying to achieve, if you compare the UK to Europe, in the UK you have a very transparent, a very simple method by which you can access those transactions. So you can very quickly get security, you can very quickly enforce if you have to. And I think that's one of the key differences between the UK and the continent. What I think is quite interesting is that we do see liquidity increasing across all of the European markets, not just in the UK. Although I think what makes it very interesting is that the liquidity is not uniformly spread. It's not uniformly spread in terms of the country, and it's not uniformly spread in terms of the size of the transactions where liquidity is at its best. So if you're looking at smaller transactions, there is actually still quite a shortage, and I think there is an interesting point to debate about what that debt funding gap might look like if you then, if you like, stratify the market by size of transaction. Certainly at the smaller end, there is still a demand, and I think also to some degree at the larger end, sort of greater than 100 million per loan, there is still a shorter number of banks and offerings that are available to the borrowers. So I think those are sort of the key points. I think where we would like to see the market heading is a much more diverse, and this has been my story for a long time, a much more diverse source of funds. So it's not just banks, it's not just insurance companies, but it includes alternative debt funds as well. And that's something which we see a lot more in the US, and there's many sort of examples of why that's been such a good reason to have diversity across the source of funding as well.